At 8.3%, the inflation rate is currently significantly higher than the Fed's baseline target of 2%. What happens when the interest rate reaches a peak of 0.75%? Interest rate rises typically occur in 0.25 increments. Welcome back to Everything, Everyone, and hello. Inflation in Tesla shares has been a significant roadblock for companies wanting to exclude Tesla. Commodity prices have increased dramatically over the past few months, which has had an impact on firms' sales and profit margins. Due to this, the cost of the components and raw materials used to make its automobiles has gone up, which has raised the price of Tesla vehicles. Tesla's costs have reached embarrassing levels with the weakening economy, according to Elon Musk, who recently revealed that inflation is putting a significant strain on the company. Tesla is having difficulty meeting demand for cars while managing price increases. It appears like the business is starting to strike a balance. Tesla may have to contend with yet another obstacle. Recent interest rate increases were announced by the Federal Reserve. Do Tesla stockholders need to be concerned about this? You're about to find out. But first, if you enjoy this kind of stuff, don't forget to like, subscribe, and set on notifications to be informed about everything Tesla related. The Federal Reserve has announced a 0.75% increase in interest rates, which is the third straight increase. This was done in an effort to lessen the ongoing in recent months. The high rate of inflation has steadily eaten away at the economy. According to new economic estimates, this trend may continue into the rest of this year and beyond 2023. According to Federal Reserve Chair Jerome H. Powell, there is a need to get past inflation, and to do that, the prices of commodities will have to come down and demand will have to match supply by raising the interest rate. The raise, which was recorded as the fifth straight increase to the federal funds rate, brings it to a range of 3% to 3.25, which is the highest it has been since 2008. FTD anticipates that decreasing spending will lower inflation in the cost of goods and services, while also bringing supply and demand back into balance. As a result of an excessively high demand in the economy and a falling worldwide supply, according to the Fed, one of the main causes of inflation. Consequently, lowering consumption and borrowing could push prices lower. According to Powell, people are already suffering from rising inflation, particularly weaker households, and they will continue to suffer. Despite acknowledging the painful effects this would have on individuals, he added that there is no pleasant method to achieve the Fed's goal of bringing down commodity prices. Discussing the subject, Stephanie Arrington, a former Fed economist and vice president of the Brookings Institution's Economic Studies Department, explained why she believes the change will be more advantageous in the long run. The financial expert argues that raising interest rates now is preferable to the Fed combating inflation midway through, backing off, and then having to start over when higher rates are introduced. What does this entail for Tesla's shares then? The cost of capital will rise as interest rates rise, which will make it more challenging for businesses to borrow money and implement ambitious growth strategies. In response to this news, Elon Musk stated that he opposes the move because he believes that inflation is already on the decline. Musk had previously stated that he believes inflation will fall by the end of the year, adding that commodity prices will eventually trend lower. However, Powell does not appear to hold the same view as Musk, claiming that his only goal is to lower inflation by raising capital requirements. Do you believe these analyses are accurate in their prediction that the higher interest rate will ultimately be detrimental and lead to a huge mistake? Let us know that the economy will probably slow down as a result of interest rates being at their highest level ever. The rate hike has a number of drawbacks, including higher monthly debt payments for Americans and an increase in the cost of debt for credit cards, auto loans, and other loans. Existing fixed-rate auto loans are unaffected, but new auto loans and loans with variable interest rates will see higher interest rates. Banking rates to monetary evaluations. According to Greg McBride, the average interest rate on a 16-month new auto loan will increase from a rate of 3.85% closer to 5.5% to 5.7%. This data dates back to the year's beginning. For a new automobile priced at $35,000, this equates to an additional $11 per month in auto financing payments. Many consumers might possibly be deterred from taking out vehicle loans at this point. Additionally, a rise in the unemployment rate is anticipated. Joe Brazil, realized chief economist at RSM, disclosed in a recent note that although interest rates do not directly control mortgage and other loan rates, they do affect how much banks and other financial institutions will pay to borrow money, which in turn affects loan pricing. Job losses could go well above 5.3 million, resulting in unemployment rates of 6.7 at the upper end of the range. The question is, however, if this higher interest rate will affect the price of Tesla stock. While this is possible, it does not necessarily follow that it will have a direct impact. Instead, the major factor in Tesla's stock valuation, as well as the price of pretty much any stock in the chart, is investors' expectations for the stock. Following the latest Fed disclosure, the stock market is expected to respond if Tesla investors believe that a higher interest rate will disproportionately restrict capital and hinder the economy. Over the past year, Tesla's stock price has increased by 15%, but it suddenly decreased by over 30%. This could be attributed to investors' fears and uncertainties about the upcoming quarters. The value of Tesla could be little or unaffected by the increased borrowing rates. According to well-known stock trader and YouTuber Dave Lee, there are a few things that can help Tesla increase its profit margins in the years to come despite high interest rates. Going forward, Tesla has a lot going for it. First off, there is a big market for their goods. Second, their margins are high right now and are getting better. Third, they are starting up new plants in Austin and Berlin, which should increase revenue from margins due to the expense of manufacturing efficiency improvements in these new factories. The highly anticipated AI Day 2 is another event that Tesla investors are excited about. According to Dave Lee, Tesla's FSD beta software and the anticipated U.S. tax credit can further boost the automaker's revenue and profit margins. In reality, these factors are likely to increase investors' expectations for Tesla stock, preventing a further decline in price. Musk announced in June this year that Tesla's second AI Day event will be held later in September. According to him, a working prototype of Tesla's humanoid robot is going to get unveiled at the event with other interesting projects, that the car companies working on several turbofans and analysis are looking forward to this event, and many reveal how optimistic they are about AI Day 2, boosting Tesla's valuation in the long run. Aside from the Tesla bot, investors are also hoping to get updates on the Tesla robotaxi and its Dovo supercomputer. If Tesla can successfully come up with convincing updates on these projects, then investors may have no reason to doubt the company's potential or lower the valuations and price targets. And since Tesla's AI Day is more of a recruiting event, it may actually be able to attract the best engineers to work on these projects, making them a reality. However, although Tesla shows a huge potential for increasing its revenue and car sales in the coming years, it is still important to keep an eye on the market performance. According to Dave Lee, the stock market may experience more volatility in the next quarters, and Tesla stock is still very vulnerable to the aftermath of the increased interest rate. Likewise, some experts predict that inflation will remain high at the end of the year, possibly 4.5%, using Fed's preferred gauge, before it falls closer to normal levels this year. While Tesla may have effective strategies against inflation now, it is never certain what the future holds. What do you think about the Fed's recent position on interest rates? Should Tesla investors be concerned about the fallout and what it might mean for the stock of Tesla? Let us know in the comments section below. And if you want to learn more about what Tesla has been doing recently, click on the next video on your screen. We'll see you there.